An insurer has started offering a 50% discount for Tesla FSD driving. This is not a gimmick just to increase subscribers. They receive vehicle telemetry data in real time. They separate human driving from AI driving by the mile. It is the peak of usage-based insurance, calculating rates with data. It's the first case of proving the efficacy of autonomy with cold hard cash. Insurers now know exactly when you turned on FSD. They identify the software version and even the sensor configuration. This is precision-targeted insurance that segments risk by the second. Prices are determined by when and with what software you drove. The data barrier between manufacturers and insurers has collapsed. A new global standard for shared responsibility begins here. Insurers are fundamentally entities that convert risk into money. They speak through accident data and underwriting models, not emotions. This is the result of confirming a significant drop in accident rates with FSD. It is on a different level from simple past safety assists. Real-time mode tracking is the most advanced approach in insurance history. When insurers reward with price, consumer behavior changes instantly. This discount doesn't mean level 5 autonomy has been perfected. It is not a declaration that the system completely replaces the driver. The core is the safety achieved when humans and systems combine. The collaboration of human and AI is stronger than a human alone. The system covers your mistakes and lowers the overall risk. Insurers have captured a commercial opportunity at this exact point. Of course, current data doesn't represent every road on Earth. These are samples collected under specific conditions and versions. A single update can make the system's performance swing at any time. Insurers are also fully aware of this technical variability. This move is not a free pass directly leading to regulatory approval. More independent verification and long-term data remain as homework. The NHTSA is still keeping a very close eye on Tesla. FSD limits and driver supervision issues are still hot debates. The risk of data bias has not yet been fully resolved. Legal battles over liability in accidents will be complex. If the regulatory climate changes, rates could be adjusted overnight. The speed of technology is ultimately a matter for legal frameworks. For investors, this news is a powerful signal for revenue acceleration. If insurance gets cheaper, FSD adoption rates will skyrocket. This means an increase in high-margin software subscription revenue. Vehicle usability improves and brand loyalty becomes rock solid. It's a structural shift from a mere manufacturer to an AI service giant. Market-based trust eventually becomes the basis for stock valuation. Tesla's product competitiveness is now decided by insurance premiums. It's the magic of maintenance costs being cut in half when using FSD. It secures overwhelming dominance in brand value and TCO. Of course, high valuations and recall risks still exist. Short-term volatility is an unavoidable destiny for investors. However, the core puzzle piece of the long-term growth story is set. This case will put massive pressure on the entire insurance industry. Tiered rates by software version will become the industry standard. As data sharing becomes routine, risk models will become more precise. Used car valuations and rental business models will change. Financial infrastructure for the robotaxi era is being built. We are in an era where software dictates the economic value of a car. Lemonade's experiment is a commercial victory for autonomous driving. Data-based rewards have a real impact on consumer strategy. It is the strongest catalyst to strengthen Tesla's subscription model. Realistic constraints will gradually wash away as data accumulates. For investors who can endure volatility, Tesla remains attractive. The flag of autonomy has now covered the real economy of insurance.